Watching India market open, it's the last day of the week. Lots and lots of earnings to react to. Tech sector will be in focus. Global cues as well on the radar. And the very first day of a new trading month for the F&O space. All that and more. Good morning, Tamanna. It's mixed across the world. Asia at least is seeing some bit of a weekend cheer.
Yeah, Asia's opened well, but Asia's sort of marching to its own tune. Bank of Japan expected to keep rates steady. Inflation data that has come in is okay, but what we've seen overnight in terms of data in the US is definitely concerning, and we'll get into a bit of a conversation on that as well. So let me quickly take you through what happened overnight. The Dow dropped over 300 points in trade. At one point was nearly 700 points down, but then recovered to some extent. And what has concerned is this fear of stagflation. So a combination of lower than expected economic growth and higher than expected inflation. Not a good combo at all. It doesn't allow the Fed to cut rates because inflation numbers are not within comfort zone. On the other hand, you have growth also not really coming through. So that is what has caused a bit of concern on Wall Street. Meanwhile, post-markets, mega caps had stellar numbers, Alphabet and Microsoft both. Alphabet, in fact, beat expectations, and in futures trade, that stock was up 16%. So Sundar Pichai has really pleased investors on the street. Meanwhile, what is the data that has concerned people? And I'll take you through that because that's fairly important. So in Q1, the US GDP grew at 1.6%. The estimate was 2.4%, so a fair amount below estimates, and that really is concerning. But on the other hand, your PCE, your inflation gauge, rose 3.4%, so nearly double of the previous quarter of 1.8%. This is the number that the Fed wants at 2%. So you have inflation peaking. Even the jobless numbers are not really pointing to a stable economy or a very strong economy. So a bit of a mismatch there, and it's leaving the street unclear about what to do. And you saw that in the bonds as well. The US 10-year rose to its highest level in 5 months at 4.71% on the back of all of that uncertainty. Brent, on the other hand, is back over $89 because of the US GDP data and, of course, of geopolitical concerns always simmering in the backdrop. Asia, on the other hand, although has opened pretty decently, and we'll pull that up for you. So Asia is doing okay. I'll quickly look at the fund flows for a second to give you a sense of what happened in trade yesterday and what are the kind of... So FIs are continuing to sell, and that happened yesterday as well. Perhaps that's why you had a bit of a tepid close after the way the markets were moving all through the day in India. So 2,800 crores on sales. DIIs bought pretty well, 6,000 crores worth of purchases on DII. So net, Samina, I would say that mixed cues, and now rate cuts are being penciled in maybe for September. We'll hear from the Fed next week as well, but it's come down to one rate cut in September, maybe.
If I had to put money on this, Tamanna, I don't think we're getting a rate cut. All of this year, you've got elections coming up soon, and we've said this from December.
You've said this for
I've
sure.
maintained it, but of course, after Vodafone yesterday, I should keep my money to myself.
So you're sounding like Neil Kashkari. He has a similar view, one of the Fed officials, and he's saying 2025.
If that, right? But
yeah.
Just layman, if the economy is doing okay, in this case, of course, GDP is otherwise, but if you're happy with the way the economy is doing, inflation is a concern, why would you cut rates?
But they're not happy with it. So this GDP data has skewed that whole conversation. You don't really know what's happening.
But I think this rising US yields is what's going to be sparking concerns for developing markets. And we've seen that in those FI numbers, like you pointed out. The Indian debt, Indian equity is seeing outflows. And very soon we will see that across other Asian markets as well. But I think we should delve into what this really means for Indian markets, because I know our markets have been supported by DIIs, but with rising US yields, the risk reward suddenly turns in favor of keeping your money in America as opposed to bringing it to India. And I'm not talking about the 2 to 3 year growth perspective, but if it's easy money, I don't know what's doing to us or could potentially do to us.
You know, it's interesting that we've spoken about this so much because Chris would have spoken about the very same thing in his greed and fear note as well. Yeah. So
we're all on the same page. We discuss it as much.
No, but it's interesting. He says that greed and fear repeats the long-standing view here that US Treasuries are in a structural bear market and the extraordinary outperformance of emerging market government bonds since the COVID-triggered Fed monetary expansion is a sign that markets have started to question the assumption that Treasury and other G7 government bonds are risk-free. Because frankly, investors out there have technically not made any money. So that's part one. And therefore, it comes to the whole overarching view that no one knows anything. I mean, people have been penciling in rate cuts for a while. Now that is starting to change. Who knows if inflation data comes off in the second half because of the base effect, then suddenly people will say, "Arey, we had to said that there'll be rate cuts."
And now they're talking about a stagflation. So that's the other concern that's rising in the US.
Plus high inflation is anyway a concern. September is the earliest now that we're talking. But, you know, coming back to what we're expecting in trade today, we had a fairly decent day yesterday, Niraj, all things considered, barring Kotak. It was not half bad, and the numbers which have come out since overnight are also fairly decent.
In fact, the March series as whole is also not done too badly. So I think there was participation, and we should be taking a little bit hard from that.
Oh, most certainly. I mean, the dips getting bought into. Essentially, every dip is getting bought into. But interestingly, yesterday, because somebody commented on Twitter as well, that, you know, that we were speaking about this possibility of if the markets eclipse 500, then a swift call covering led up move. And that seems to be what happened yesterday amongst everything else, because there were very swift up move in the Nifty, partly led by the covering of calls. A significant call writing at 22,500, 22,600. And I think some bit of that got covered as well, which accelerated the move, if you will, in the second half of trade. The interesting thing is, could this month be a month of a bit of a risk off for this series?
Sell in May and go away used to be that old
right? No one is selling before June 4th.
No, but if you look at historical data,
Here's the data. So the data is that the expiry analysis suggests that FIs have decreased the long-short ratios and the positioning quite significantly on both the Nifty and single stock futures. So, by the way, the April rollovers, right, on Nifty index futures were 65.12%. That's way lower. The previous month was 69.7, if I'm not wrong. This is 65.2. So, clearly, people are not really going ahead and banking heavily on making very large positions. I know Agam and Samina will talk about that, but this was one data. And I mean, very likely election volatility, don't want to take part in that. And FI positioning, the net shorts in index futures has come off. The long short ratio decreased from 0.81 to 0.62 index futures. And on single stock futures, FIs decreased their net longs from 448,000 contracts to 332 contracts this expiry. So expiry to expiry, rolls are lower, FI positioning is lower. People are clearly going into this series very, very light.
Also, just to put numbers to that and why we say that the second half of the year between May to October usually sees a weaker market trend. May 2020, the Nifty was down 3.8%. May 2021, we were up 3%, so that wasn't too bad. May 2022, we were down 6.2%. And May 2023, we closed about 1% odd higher. So, but keeping that in mind, there is a little bit of a concern. Remember the long position of FIs, while you put a number to that, in Jan actually stood at 70%. So they've been declining gradually. And while the rollovers in this month look better than they did in April, they still are much lower than what we've seen.
Lower.
They're lower than what we've seen over the last 6 months, but I think they came in at what, 65%, if I'm not wrong.
Previous month, Samina, was
3-month average is
71%, 71.4%.
And the 3-month average is about 76.8.
Yeah, so it's quite staggering as to what's happened out there.
Yeah, and now with this great news on GDP, we will have to only wait and see.
It's a little tight. It's a little tight, but you know, in the Indian context, and you know, that's what we're talking about this morning. It's I think results, corporate numbers will maybe take the forefront, of how stocks react.
So, but just before we get to stocks, just on the trade setup, a couple of things that I wanted to highlight. One, Bank Nifty moving despite the Kotak downtick shows some inherent strength. Yes, but I'm just saying, because Axis, SBI, everything came to the fore. So Kotak being down 10% and yet the Bank Nifty doing what it is doing. Just wonder if a breather is around the corner somehow.
For Kotak?
Yeah, no, for the Bank Nifty at large. 6 days on a trot now. We've had a good run without any plausible reasons. Yes, IndusInd might also add a little bit of a flavor, but it's not a heavyweight, so that is one. And two, just three buckets. We've been speaking about chemical stocks. Yesterday too, some of the chemical stocks. I mean, a Kotak report brought up Neogen Chemicals 12%. Today, Himadri numbers are good. I think Tamanna is going to speak about it. So, chemical, aluminum players. Very keenly watched out for. The City Note on Vedanta speaks about that. And lastly, CDMO players have disappointed. The commentary from both Syngene and Laurus leaves a lot to be desired. I would reckon that the CDMO guys could actually see a bit of a downtick again today.
You're talking about sectors you want to watch out for this month. So chemicals, and I think we've talked about this over the last few days. Niraj just mentioned that defense, banks, auto, could be ones you want to watch out for. Tech has had it quite rough. We've seen those in the earnings. There is no clarity, no indication of an improvement in the US deals or TCV. So tech may continue to be in a soft spot. Talking about rolls for banks specifically, the rollover for Bank Nifty dipped to 74.4% from previous month's average of about 87.2. The rollover cost members also decreased 0.4 as compared to the 3-month average of 0.9. So those are a few data points you want to keep in mind when you watch out for this market. A quick check on the implied Nifty and on the VIX index. Remember, the VIX has also had it quite wild in the last few days. It's actually looking pretty good. A 100-point gap up is what we are expecting. I'm not sure if that's how it's going to play out, but interesting. 100-point higher start would definitely mean some cheer for the street. Again, may open with a gap, but there is a good reason that you may see a little bit of selling emerging because we've held out quite well. And sure, while the market remains by the dip strategy, some profit taking cannot be ruled out at this stage. Let's quickly highlight for you a few stocks you want to watch out for. IT sector has disappointed with a whole host of weak earnings. You had LTI Mindtree yesterday, signed today, Emphasis, Tech Mahindra to add to that list. I'll highlight for you what Tech Mahindra did. Numbers were not too impressive. Clearly, what we are seeing is discretionary spend in the US is not picking up. TCVs are also under pressure. Conversion to revenue is the big challenge for most of those tech players. Revenues were down about 1.8%. Margins came in also down for Tech Mahindra at 4.9 versus 5.36. EBITDA was down 9% at 638 crores versus a fairly large Bloomberg estimate that was about 1,442 crores. Net profit was up 27%. At 664 crores. So that's what you have in terms of Tech Mahindra. Not great earnings. It'd be interesting to see how the markets react. Brokerages, though, haven't gone too aggressive in calling the shots on them, but largely not very impressed from what I've seen. Citi has clearly said they've got a sell on it. They've said it's another weak quarter and they would be a little concerned. BFSI was up 3.5%, and the positive, of course, was that BFSI for this company has done well, but across negatives, deal TCV is actually down 35% YOY. Headcount is down 5%. There's softness in retail and transport, and the US continues to be a sore point for them. Along with that, you had L&T Technology. They reported numbers too. Their revenue was up about 4.7%. EBITDA was also up. Margins were down marginally by about 30 basis points, but I think the street might actually like what L&T Tech has reported, but we will come into that in a minute. Net profit is also up marginally, and they've also interestingly done a dividend, which is usual across tech players, of about 33 rupees a share. What was interesting is UTI Asset Management. On the face of it, these numbers actually look pretty good to me. But if you go through what the brokerages have to say, they don't seem very convinced about the kind of performance UTI has put out. Their total income was up 35.9%. Their net profit has also come in marginally higher at about 181 crores. AUMs have risen 19% YOY. But a couple of big brokerages have said that operational performance remains weak on this one. They said that their equity-oriented market share has compressed to 3.9% in March 24, 4.1% that was seen in the last few quarters. They've also recorded equity outflows, which was quite high at about 13 billion. And their SIP gross flows have also come down. While that is what the numbers are reflecting, if you look deep down, I'm not sure where the growth is then coming from, because if they've seen SIPs coming off, equity market share reducing.
Cost optimization, Samina.
So it's operational efficiency.
Operational efficiency has helped the profits, but the SIP gross flows, you're right, have come off.
So that could be a concern, but I think it'd be interesting when the management comments on what the favorable yield mix is doing for them, because like I said, they look great. The stock has done really well in the last 1 week, but if it's only operational efficiency, you might want to look out at FY25 and be concerned, I'd imagine.
You know, for AMCs, just another point, and this is a story my colleague Saloni has also been reporting, this whole KYC business has really bothered them, not just in terms of compliance. They also see a possible impact on inflows. Remember, there are new KYC norms which kicked in from the 1st of April. And if you don't have those KYC norms in place, you can't actually put in more money. So they've written now, AMFI's written to SEBI saying, please fix this, because it's not only bad enough that people can't withdraw, but even inflows could get impacted. Now, having said that, a few more stocks we should watch. Kotak Mahindra Bank down nearly 10% yesterday, and that was expected after the RBI action played out. But, you know, what I found, I don't know if I should call it strange or definitely noteworthy, is last evening there was a tweet out from Kotak Mahindra Bank, first ascribed to their CEO, Ashok Vaswani, which was essentially a message to customers saying, don't worry, everything will be fine, we'll fix what the issue is, everything will continue as per usual, which for current customers, things don't really change. And then that tweet gets taken off. They put it back, but this time it is no longer from the CEO. It is just from Kotak Mahindra Bank. I thought that's quite strange, because if you're trying to quell concerns, why would you not own it? On the other hand, you haven't really seen any clear communication from the bank on, is there a timeline in which they're going to fix it? Just very, you know, broad kind of statements saying that we will fix everything shortly. So, even in the letter to the employees, which we reported on NDTV Profit. So I think you could see continued pressure after the fall yesterday, which was an over 10% fall. Maybe at lower levels, you might see some clawback. But right now, Kotak Mahindra Bank may not have another good morning. But we'll, of course, wait and see how that pairs out. Bajaj Finance was the other one. In line, largely, the numbers in line, net interest income up 28% YOY. Remember, this was, in terms of compliance, also a bit of a challenging quarter for Bajaj Finance. The RBI had its own sort of, you know, regulatory action on small ticket loans. They had to provision higher, they had to change that mix, etc. So all things considered, operating profit up 25%, provisions as expected up 53%, and PAT was 21%. The management is cautiously optimistic on profitability. I was looking at the Citi note this morning. They've maintained a buy with a target price of 8675. So they see about a 19-20% upside. And the key point is exactly this, that earnings are in line with forecasts despite being impacted by 4% due to regulatory restrictions. They've, of course, formally, and this is what the management said in the con call, they formally requested the RBI for a review and removal of product restrictions. Their FY25 guidance has also been trimmed, but nevertheless, I think Bajaj Finance might not see a very bad opening, and the numbers are largely in line. Interglobe was the other one I wanted to talk about, Indigo, and this was an important, though not very highlighted development yesterday, but definitely an important one. So Interglobe Aviation has effectively ordered 30 Airbus A350-900 aircraft. So this is their first venture into the wide-bodied aircraft. They have said they have a purchase right for an additional 70 Airbus A350s. So this bolsters their international presence. It's portraying sort of a very positive outlook for the way the business is going when you're putting in an order to this extent. They've also inked a deal with Rolls-Royce for purchase of 60 Trent engines. So I think safe to say be prepared for a good move in Indigo this morning as well. So these were some of the first list of stocks that I was looking at.
And speaking of financials, by the way, IndusInd Bank would be the one that could actually give a bit of a support as well. Though this whole talk of how earnings continue to benefit from a utilization of the contingent provisions of 300 crores and the traction in retail deposits is missing. But the overall performance seemed okay. NI, PAT growth of 15% YOY, loan growth at 5% QOQ. You can't really find too many faults with this. NIM stable at 4.26%. Moderation in slippages across segments. So, in some sense, IndusInd Bank cast the near perfect picture. I would suspect because of the inherent strength on the bank Nifty, you would probably see IndusInd Bank as being one more strong stock in the session today. Let's wait and watch. Emphasis, and you'll hear the management talk to Samina a bit later on in the show. Results were in line, maybe marginally lower, but the problem with Emphasis this quarter has been the total contract value signings. They call it TCV signings, which is the total contract value. And those signings were at $177 million only, which hints at a delayed recovery. Remember, this number at 177 is down 27% quarter on quarter. The 4-quarter average is actually 418 million. So the new deal signings are a bit off for Emphasis. Would be interesting to see how the stock reacts to this one. And Olectra Green Tech, for all the fanfare around order wins and the kind of valuations that Olectra trades at, it's an expensive stock, egregiously expensive stock, I might add. The revenues were down 23%, PAT was down 45%, margins down 136 basis points. Let's see if there's a bit of a negative reaction on this one. So these three kind of stood out for me in the session today, or for the session today.
Also, just a smaller one. I don't know whether you've got Som Distilleries on your radar. But quick reporting on that one. They've reported, a small company, but worth a mention, they've reported a profit of about 20 odd crores, which is about 26% higher than what they'd done last year. Revenues are also up substantially, about 51% to about 381 crores. Now, interesting because it's a small company. The stock has done exceptionally well in the last 1 month, and you may see it do quite well today as well. So, small company and hence a big move cannot be ruled out. Could be a trader.
Dawa is all
the things that are doing
Daru
well.
and Dawa, both are working.
And milk.
दूध भी हसन देखा था हमने. So all this dairy intolerance, alcohol, all this healthy living is for I don't know who, the Americans.
Whatever you need, it all works.
There is an American coming up on the show, I believe.
Yeah, you should go to him quickly.
Aren't you talking to somebody from
Santosh
on the US data
Global
points?
Cues.
I don't know if Santosh wants to. But before I go to Santosh Rao, yes, and we are going to talk about global cues. Just a couple of very quick stocks that I want to talk about. KPI Green, good numbers. Revenue up 58%. Remember, this is a company which has had a bumper order book, so that's why you're seeing those revenues up. But even EBITDA up 71%, margins 32% up. 32 versus 29, 236 pips up, and net profits at 35%. KPI Green might be fairly decent today. Tanla I'm just talking about Tanla because that stock has so much.
The last few years.
EBIT down 18%, margin down 321 bips, net profit down 7%. I want to see what happens with this stock.
It might still open higher given its Tanla.
The kind of movement. So, the numbers are not great. So, I'm just curious to see what happens with Tanla. Himadri, I took because, specialty chemical seems to be staging some kind of a comeback. And the EBITDA numbers looked good, 42% up, margins also up 300 pips, and net profits up 51%. So, Himadri is something you should keep on your radar. Santosh Rao.
Just one quick, Tamanna. I just want to quickly hide Zensar because we've highlighted all the tech companies. It'd be unfair to leave this one out. They've registered a profit of 173 crores, which is up 45% Y on Y. This is despite a muted top line. The reason you've seen a bump up on numbers is other income and improved operating margin. So you want to watch out for this one. The front line, the top line may be deceiving, but it's due to other income that we've seen a jump. So watch out for Zensar. Another one is Aavas Financiers. Smaller, but worth mentioning, 142 crores reported. They've grown 12.5% YOY, and the net interest income is also up 14% YOY. So this could see a positive move in today's day of trade as well. Back to you.
All right. We wanted to talk to Santosh Rao this morning. Santosh Rao, thank you for joining us. Thank you for your patience. I know you've been waiting a couple of minutes, so thank you for that. He's head of research partners at Manhattan Venture Partners. Just wanted to get your take on the kind of, I would say, varying data we've seen out of the US coming out last night, and it's left, I think, bond traders, of course, equity traders a bit confused about what happens next. So GDP in Q1 poorer than expected, your PCE data, your inflation data is higher than expected. What do you make of all of this when it comes to the big trigger of Fed cutting rates?
Yeah, good morning. I think what we saw today, when the GDP data came out, is that the fears of stagflation started coming in. The talk of stagflation, where high inflation and low GDP, low growth. I think that's the big fear, and that was always in the back of the mind. But so far, things appear to be good. So this caught us by a little surprise because GDP was expected to be at 2.2%. Things were coming along. So what you're seeing with the earnings so far, the theme that you're seeing is the revenues may be softening a little bit, but the EPS, the bottom line, is good with most companies, and that means that the margins are holding up. And that's what's really helping all the companies because of cost cutting, because of AI, productivity gains, or whatever. I think that's what's happening. So revenue slowing down, EPS still okay. But all of them pretty much are guiding to a softer next few quarters or next year also. So I think that's the big confusion as to where are we. At this point, looks like the Fed will come back into the picture at this point. One cut, maybe two cut is still on the cards, hasn't been ruled out yet. Let's see if there will be a revision of these numbers down the road, because that's been happening a lot. You come out with a high number, then they bring it down. You come with a low number and it raises up. So I think market is going to wait for another report to get confirmation that things are really slowing down. So at this point, definitely that was not a good news. Today, Google numbers are very good. Microsoft numbers are very good. So I think that should help the market again tomorrow. Facebook was disappointing the other day. So kind of mixed reaction there, but there's a lot of AI investment going on. So things are okay. Things are fine. The labor market is still holding up pretty well. So that's the thing. Inflation, we want it to come down, is very sticky at this point. And that's the big thing that people are watching at this point.
Right. There's a big difference between what's happening in the real economy, what's happening in the macros. But very pointed question, rising bond yields in the US. What does that mean for risk assets like India? We've consistently been seeing FIs selling because clearly the risk-reward ratio is now more favorable for US debt versus Indian markets.
Yeah, rising debt, rising dollar is definitely not good for emerging markets. So I think that risk is there. Let's wait and see if this persists. I hope it's not a knee-jerk reaction, but at this point, the long thought of fears are coming to bear at this point. So I think the sell-off was totally understandable if you believe that we are definitely on a path of slowing down, and the Fed is not going to definitely cut. I mean, it's not going to cut rates at this point because of inflation. They need to, because the growth is slowing down. So I think a lot of balls in the air at this point. Wouldn't jump to conclusion. Let's wait for the PCE data that comes out tomorrow, which is Friday. But the inflation component of the GDP data today was pretty bad. I think that's what spooked the market. But tomorrow, let's get another confirmation whether the actual PCE data will be below consensus or not. If it's a hot number, then we are really not in a good shape. So let's hope that it's not that hot tomorrow.
So a fluid situation over there. Thank you so much, Santosh Rao, for joining us this morning and giving us that quick analysis of all of the data that we're seeing. Remember, more data coming in over the weekend, at least for India, and we'll see if that reflects Monday morning trade. Always good to talk to you. All right, we're talking about the elections this morning, and Alex, that's the focus on Editor's Cut, isn't it?
Absolutely. What else should we speak about? It has to be the second phase of the general elections. 88 constituencies going to polls, and they have, in fact, already started seeing people queuing up to cast their vote. And the most important question to ask this morning is, what are the key battles to watch out for, and how important is this phase of the poll? So let's start with that.
Yeah, the reason that this phase is important, there are about 88 seats that go in. And remember, phase 1 was the one with the largest number of seats. This is 88 seats. Why this one will attract a lot of headlines, Alex, is because of the faces. The names that are going to poll. So you have Hema Malini, you have the former speaker coming in, Rahul Gandhi. The Wayanad battle is in this phase. You have a very interesting battle between Shashi Tharoor and Rajiv Chandrasekhar in Thiruvananthapuram. You know, I'm excited to see what happens there. But beyond that, this phase is all about Kerala, I would say. That's the big one. So
because all of Kerala goes to polls.
All of Kerala goes to polls. About half of all seats in Rajasthan go to polls. Half of all seats in Karnataka go to polls. Bengaluru polls. And I'm hoping Bangaloreans, please come out and vote. You know, all urban centers, including Bangalore, are really known for poor voting turnouts. Take an off if you have to. You have a legal right to take an off if you go and vote. So,
and there's also a portion of Uttar Pradesh that goes to polls.
Yes, there are seats in Uttar Pradesh. Of course, there are seats all over. That's why there are 88 seats in all. But I'm just talking about the key ones. So why is this one important? Clearly, the big fight in Kerala. Now, Kerala is somewhere where the BJP has never had a seat. That's fine. But look at what happened in 2019. Their vote share went from
a minuscule amount,
to nearly 15%.
Interesting.
In 2019. They are going to try and increase the vote share further. That's really going to be the big fight. Whether they get a seat or not, I mean, that's a bonus. In the big picture, it's not going to matter to whether they form the government. But this whole election, there's been a focus on making further inroads into the south of this country. It's greenfield territory, relatively speaking. So, which is why Kerala is important. Rahul Gandhi's Wayanad seat is important. It's considered to be the safe seat, but it's a three-cornered battle. So, there is Annie Raja of the CPIM.
And she's very popular.
She's very popular. She is D. Raja's spouse, who's the head of CPIM, very veteran leader. So, she's not a, very easy walkover kind of candidate. You have the BJP's Kerala chief, K. Surendran, on the other side in Wayanad, and Smriti Irani, who actually won Amethi and claims to have pushed Rahul Gandhi out of Amethi, has been campaigning non-stop for K. Surendran. So Wayanad is one interesting seat to watch. He's likely to make it through. That's what the polls predict. But with what margins? Thiruvananthapuram, like I said, is interesting because it's a three-cornered seat. Shashi Tharoor is a three-time MP from there. So anti-incumbency, etc. But there is, of course, CPIM, Rajiv Chandrasekhar and Shashi Tharoor. Rajasthan also important because half of seats go there. And what we've seen with Rajasthan is that when it comes to the Lok Sabha elections, no matter how, they go one way or the other in assembly, they alternate between the BJP and the Congress. But when it comes to Lok Sabha, it's all one way for the BJP usually. So we'll see what happens in Rajasthan as well.
And that's an interesting data point, right, about various constituencies that always vote the same way when it comes to the general elections. The populace just knows how to go.
Yeah, so a lot of Indian voters now are very clear that how they want to vote in the general elections versus an assembly elections is different. That's why Karnataka also becomes key. You'll see a lot of our IT bosses come out to vote this morning. I think I already saw pictures of Narayan Murthy. Tejasvi Surya is, on the ticket as well in Bengaluru. Karnataka voted for the Congress last time. How will they vote in a general election? Will they stay with the Congress or, will they vote for the BJP? Remember, the JDS and the BJP are in alliance in Karnataka this time. So all in all, an exciting sort of phase. Just one more point I'd like to add before we wrap, Alex, is look at what's been happening in the last 2 days. And this is what I would want to watch. This inheritance tax conversation, this redistribution of wealth conversation. Does it impact voters in the favor of the BJP is what I would like to see. Because I just want to see if you can pull up that chart, the 2019 results in terms of BJP's NDA's vote share versus India's vote share. The NDA got 46% vote share in the seats they fought, whereas the NDA was a little lower. It was up, I think, 33% odd vote share. So it's a tough one and important for the NDA and the BJP to increase their vote share in this phase as well.
Absolutely, and we'll know soon enough. We will, of course, Tamanna, be bringing a live coverage of the voting. And once again, I'd like to reiterate, if you are watching this and if you are in any of those constituencies, please do go out and exercise your right to vote.
Just want to add, if you're in Bengaluru, and our colleague Pratibha has done this excellent story, there are dosa restaurants which are giving you discounts, Rapido's giving you a discount if you go with an inked finger. So just go vote.
Yeah, there are bonuses and benefits to going out to vote beyond just the exercise of the mandate that you've been given, or rather exercise of the right to vote. We have to slip into a very quick break. There's more on the other side, so do stay tuned.
Welcome back. This is India Market Open. Well, we saw a very interesting day of trade yesterday. In fact, Nifty reclaiming 22,500, but more importantly, after that substantial choppiness, we've seen it end in the green. So based on that, of course, we are also moving into a new series. And May series, well, it promises to be an interesting one because it's not only are we bracing for another earnings season, the final quarter of the financial year gone by, but also election season. And based on that, we are starting to see positions being built as far as May futures go. 30% added in as far as May futures and the Nifty are concerned. The Bank Nifty also adding about 15%. The Bank Nifty also, in fact, edging back towards the mark of 48,500. In terms of the options market, well, yesterday, of course, was a day where we did see a lot more writing around the 22,600 calls as well as puts, as you can see on your screen there. Well, similar sort of activity in the 22,500 calls and puts as well. But where does that leave us with your overall open interest? Well, let's pull your distribution picture here. So on the lower end, we are looking at a substantial amount of accumulation around the 22,400 and 22,500 put strikes. And of course, on the higher end, we are starting to see traction return to 22,900 and 23,000 calls. So these are the some of the strikes that we are watching out for over the course of the next few days and weeks. But in terms of stocks, Again, plenty to keep an eye on. Of course, Bharti Airtel in terms of longs coming through, and in terms of unwinding, this perhaps is not as consequential because it's April futures and we've seen a lot of declines coming in. But besides that, we're also keeping an eye on a handful of banking names. IndusInd Bank, of course, will react to earnings, as will Bajaj Finance. So these are some of the names that we are keeping on our radar. But the question really is, where do we go from here with respect to benchmarks at the moment with the way things are? And are there any other trading ideas out there? Well, let's get in an expert there. We have Rahul Ghosh of Hedge.in who's joining us on the show. Rahul, good morning. Thank you so much for joining in. Let's once again start with your assessment of the benchmarks, the Nifty, the Bank Nifty. What are you expecting from them and how are you placing your bets here?
Good morning and thank you for having me. So firstly, as I mentioned even the last time around, that May is a 5-month series. And 5-month series, historically, if you pull up the data, you will notice that they are very, very volatile in nature. On a personal note, we expect that the May series would have about 1,000-point move. That is at least 700-800 points on the upside and about 400-500 points on the downside or vice versa. So that kind of volatility is what we are expecting. The open interest data, as you rightly said, is not concluding any sharp move on either side, because if put writers are increasing, the 23,000 call writers are still active. So it's not giving any conclusive data. In terms of levels, 22,650 to 22,800 is a congestion zone on the index, which should be noted. So you still have about 100 points on the rally. And once you get another 100 points on the rally, we would be a little cautious. And the next long we would initiate only after 22,800. So that's one point to keep in mind. Another point to keep in mind, very interestingly, if you notice towards the beginning part of the April series, there was very heavy call writing of the 23,000 puts. Now, mind you, towards the beginning of April series, there was almost 700-800 points to 23,000. Such heavy put writing, I beg your pardon, not call writing, such heavy put writing basically tells us that, yes, even though there was volatility, the big players are clearly buying in the money puts and expecting a move towards the upside.
Right. So, Rahul, based on your observations, how are you deploying options? What kind of structures are you putting on?
So the last time we discussed about a very specific put calendar structure, which was for the downside to sideways move in May. Now, the beauty of that strategy was, even though now you see markets have gone up 400 points, you would notice that the structure which we created last time is hardly losing any money, because we had a sold unit as well as a bought unit to compensate this. Similarly, we are creating another structure this time. This is on the upside to play the 100-120 points that can come about in the next few days. The structure basically is called a modified call butterfly. What do we do in that? We buy a call, we sell 2 calls, and we buy a call again. So buying of 2 calls and selling of 2 calls. This makes the position completely hedged. And once a position is completely hedged, you're not prone to gaps on the upside or the downside. The structure works as follows. We buy the 22,700 call of May. We sell the 23,000 call of May, both May and series. We further sell the 23,300 call of May. This is again May end expiry. And to hedge the second sold call, we buy a 16th May 23,300 call. I'll repeat: 22,700, 23,000, 23,300, and 16th May 23,300. Now, how does this structure work? This structure basically makes you money if Nifty moves up sharply. This structure makes you money if Nifty moves up slowly. And this structure protects you if Nifty does not move up at all. How does it do that? If you notice, the sold legs encompass almost 80% premium of the bought legs. So a simple roll down of the 23,300 to 23,200 or 23,100 or even to 23,000 will make sure we compensate the extra debit of 20, 30 or 40 points that we might have. Also, one more caveat to keep in mind, that this strategy is best entered when Nifty is close to 22,500. So yesterday markets were signaling a 50-60 point gap down, which is when it is ideal. Not that you can't enter it at current market price, but from a premium perspective, it's best entered at 22,500 or rather close to that.
Rahul, just a follow-up question on this particular strategy. Why is it that one of these calls is from a different expiry as against the others when you're deploying them?
Perfect. So the reason that is because the last 23,300 call that we have sold is basically only to cover the premium of our initial anchor unit. What do I mean by the initial anchor unit? I'm talking about the 22,700 call. So the extra sell leg that we have compensates the premium of the buy leg. But if prices move up sharply, if Nifty goes up 700-800 points, I mean, May is going to be a volatile series, make no mistake. To hedge on the upside, we use the 16th May expiry, so that if there is a sharp move on the upside, the last bought call becomes in the money and helps us actually make money. Unfortunately, normal common websites will not be able to give you a clear payoff. So what I request participants to do in this case is draw a manual payoff and see the calculation. What happens when Nifty goes to 23,000? What happens when Nifty goes to 23,500? And you will notice that the trade is handsomely playing out in both cases.
Right. Fair enough. Well, a very comprehensively explained strategy, Rahul, and a pertinent one as well, given that we are expecting volatility. Any other stocks on your radar at the moment?
So the last time, if you remember, we had Tata Motors on our radar and we came up with a strategy on Tata Motors. That's played out well because Tata Motors has moved to the upside from the last week when we spoke. This time on my radar is BHEL. So because BHEL is on the charts, is been making a higher highs and higher lows, conventionally a very strong upward momentum pattern. Also from a conventional technical analysis pattern, it's breaking out as well. So we would plan long spreads in BHEL. This is something that your viewers can look into for the May series.
Okay. All right. There you have it. A modified butterfly is what Rahul is playing as far as the Nifty is concerned, and BHEL is the other counter on the radar. Rahul, on that note, taking a moment to thank you for joining us and taking us through your views on the markets, also explaining that option structure that you're deploying. And, well, with that, it's back to you in the studio, Niraj.
Thanks a lot for that, Agam. Well, and viewers, remember, 10 minutes. Between 8:30 and 8:45, we take about 10 minutes, explain to you option strategies. Agam talks to somebody, gives his view as well on how the derivative picture is looking like. You want to understand what's happening in the derivative space, you got to tune in for this segment. Okay, before we move on and talk about some of the other things, which is technicals and fundamentals, I think it's important to highlight what beyond earnings in terms of stocks are newsmakers, which may have a possibility of a reaction. My colleague Anushi Johnson to talk about those. Anushi, good morning.
Hi, good morning, Niraj. So I have three stocks that you should definitely keep in your radar today, starting off with Interglobe Aviation over here. Now, they have ordered about 30 firm Airbus aircraft. Now, with this, the deliveries are expected to start from 2027. Now, company also has an additional rights of about 70 Airbus in the same family aircraft. Now, currently, if you look at Indigo's, it operates over 350 aircrafts. And if you have to look at its order book of A320 family, that stands about 1,000 aircraft, which is to be delivered in the next decade itself. Now, again, moving on to Tata Steel. Now, Tata Steel has remained in focus with its European operations. Just to streamline on this, there's further updates over here. Now, they're starting and proceeding with the investment of about £1.25 billion in its Port Talbot furnace. Now, with this, they're commencing the closure of its existing heavy end assets in the following months. They're also in talks with the UK trade union over there, and discussions are going on within the next 2 weeks to discuss about the potential MOU on future ambitions of the business going forward. So also that remains on watch out on how the European business pans out going forward. Last on the list is NLC Industries. Over here, the company is commissioning a 660 megawatt of a thermal power plant project in Uttar Pradesh. Now, this is after the approval of Ministries of Coal in the Pachwara South Coal project. Now, this estimated capex for the capital cost for this stands at about 2,200 crore, and this has an extractable reserve of about 262 million tons. So, again, these three are the stocks that should definitely be in focus today.
There are lots that we need to watch out for today, and I'm going to add some distilleries to that list. Those are going to be counters that will be reacting to their earnings and stock-specific news as well. A quick check on implied Nifty before we move on with the start of the May series, and it's looking interesting, going in a little subdued and soft actually. 30-point gain is what we're expecting. It's a flat to slightly higher start that we should be expecting in today's day of trade. Well, Rajat Bose, SEBI registered research analyst, now joins in with his technical view on the markets. Rajat, hi, good morning. What are we setting? Good morning. For the month of May, what is the strategy on the index and Bank Nifty?
See, as far as strategy for the next series, I would say that you can sort of go long in, right at the outset, but then you need to see whether the Nifty gets past 22,650. 22,650 is a very crucial level, and above that, 22,768. These two resistance levels, once crossed, then we would be definitely cruising into the 23,000 zone. Whereas, if we were to see that the market or the index is going down and it falls below 22,200 mark, then there would be a lot of problems in the sense that market would show weakness and it can come down. So I would say some kind of I saw a modified butterfly kind of an option strategy. Well, that could be a good enough strategy in my view also, that you take one option on the upside, maybe 22,700 or whatever, or on the downside, you take 22,200 as well as 22,000. These two should be sold. That way you can go for an option strategy out here. But the thing that I would like to mention here is that I have reviewed mostly a large number of large caps, mid caps. A number of those prominent stocks are actually showing signs of getting tired. And you would definitely appreciate one thing, that is, in India, I don't know about other countries so much, but in India, we are already 4 years, 1 month. That is the age of this bull market. And this bull market, in our country, bull market do not last beyond 5 years, or better to say beyond 4 years. It becomes difficult, troubled waters. You are getting into troubled waters. So one needs to be very careful.
Okay. Rajat, good morning. Niraj here. So if this is the overarching view that you have, let's start off with the two stock ideas, and then we'll move on to some of the other movers and shakers. But the two top ideas for the morning.
Well, I have one counter that is I hold in my long-term portfolio. But the reason I am recommending that stock is because it has posted it has posted a hammer line that is testing a major support area. I'm talking about LTTS, Larsen and Toubro Technology Services.
Okay.
After posting a high around, say, 5873, it has come down. I feel that it has already completed its short-term correction. So the stop loss should be 5075, 5300, 5375, and 5480 are the targets. And the second one is Sun TV. Sun TV, to my mind, is actually forming a base pattern, and this base accumulation pattern is already complete. It is likely to move up. Put a stop loss below 605, and 648, 670, and 698 are the three targets. Both the recommendations are short-term trade. I do not offer intraday calls as such because the market tends to be too volatile.
Got it. Okay. Viewers, for LTTS, just keep in mind that they have guided to a 8 to 10% growth for FY25, but that is the organic growth. They have categorically stated that at some point of time in the year, there will be an inorganic move which will add to growth. So at the reported numbers at the end of FY25 will be higher than the 10% growth rate which LTTS is guiding right now. Sure enough, capital gets used for it, but there will be reported growth which will be higher. Now, which way the street takes it is a different kettle of fish. Rajat, Rajat, coming on the top loser yesterday, Kotak Bank. Are the charts fractured enough for the stock to head lower, or are these levels where it could consolidate?
Definitely, I'm coming to Kotak Bank, but before that, let me give you just this pointer. That is, apart from ICICI Bank and Axis Bank, most of the private banks, especially the leading ones, are weak. But Kotak has actually broken down accumulation pattern, developing saucer pattern. All that have been negated in the kind of fall that we have seen yesterday. So Kotak is now has actually gone beyond all stop losses, and there is no such sign to say that immediately there would be this kind of things do not come up with a major recovery very soon. It requires a lot of consolidation.
Rajat, morning. Tamanna here. So Kotak could have another day of free fall. What about, I'm keen to know your views on what's happening on the other side. Axis Bank, superb showing yesterday because of its numbers. Do you see more of the same? SBI, the other one.
Well, Axis is really doing great. Axis, if it were to cross 1140, then 1200 would be the next target. And Axis is showing a lot of strength. Yesterday, there was a gap up open, and after that, it moved up. So this is likely to continue. And yesterday, we saw major volume accretion. So volumes for the last 2 months had not been this great. So Axis is definitely bullish. And regarding State Bank, of course, State Bank also did a similar kind of a movement on the upside. It has broken out of its range. And although the volume is not as great as Axis, but it is also on a higher volume. So State Bank currently, say it is at 788. I'm looking at 805 and 814, 825. These are the three targets for SBI, and I would put a stop loss below 798.
The other one I'm keen to know your view on is Bajaj Finance. Numbers came in post market hours, seem like they're in line. IndusInd again in line. And I'm just sticking to the BFSI space for a bit because there's so much interest and so much happening on the bank Nifty as well. How do you see both of these, Rajat?
See, Bajaj Finance is actually developing a bullish setup. This bullish setup is not yet complete. You will see it completed only when it crosses the 7,500 mark. Once it crosses 7,500 mark, its next target would be 7,800 to about 7,990.
And IndusInd?
What was the other?
IndusInd, Rajat. IndusInd
Bank, right?
Huh.
IndusInd Bank. Actually, if you were to go long, I would suggest that instead of Bajaj Finance, one can get into IndusInd Bank because it is rising from its 200-day exponential moving average, and that is at 1457. So put a stop loss below 1450, and this is in a range-bound situation. So on the higher side, the range top is about 1560, 1570 kind of level. So you can expect 1550 for a minimum.
All right. Thank you for that, Rajat. But stay on with us. We'll take a very, very short break. More with Rajat Bose on the other side. We come back with pre-open rates as well. Stay tuned.
back with India Market Open right here on NDTV. Profit in conversation with Rajat Bose. A minute left for the markets to kickstart trade. About 16 for the minute for the pre-open to kickstart trade. About 16 left for the markets to kickstart. While we wait for the pre-open rates to come in, and we'll show them. But let's get in my colleague Punit, who joins in right now with a sense of what is Maruti Suzuki expected to show in the March quarter. Punit, what's anticipated?
Yeah, hi Niraj. So really strong numbers expected from Maruti Suzuki this quarter. Do note that they've already released their sales numbers coming at roughly 5,84,000, which is a growth of roughly 15 to 18% compared to the previous year. Now on the Bloomberg estimates suggest that revenue is likely to rise roughly 25% compared to the previous year, coming at roughly 38,459 crores, while its EBITDA and PAT is expected to rise roughly between 46 to 48%. For EBITDA specifically, the margins are expected to come in higher by 190 basis points, coming at 12.82%, versus net profit estimates are roughly at 3,839, which is a 47% rise compared to the previous years. Now, what are the certain brokerages also expecting and saying for these results? Axis Securities has expected a good revenue growth to come in upwards of 20%. They say that this is led by the higher overall sales which has happened in this particular quarter, as well as a higher share of SUVs sold compared to the previous year. Export sales have also aided margins, while they expect the EBITDA to improve upwards of 300 basis points. It's a rise on quarter-on-quarter level as well. While ICICI Securities also has a higher estimate of EBITDA growth of roughly 53%. And finally, Citi, they have a 20% revenue growth estimate. The one key thing that they have highlighted, that the share of smaller cars compared to last year might be higher, and they've also said that this will be a key impact to note if the management has any commentary on the other festivals as well, which were shifted in April. Finally, they see higher operating leverage playing a key role in the margin rise, while they also see that any impact of commodity cost rise has been averted with these higher operating leverage benefits. So overall, very strong numbers expected from Maruti. Results expected before market close. Back to you.
Okay. Well, we'll watch out for this. Of course, Puneet, thanks for getting us that perspective. Watch out for Maruti. We'll talk to Rajat about Maruti, but just want to see how the pre-open rates are starting off. I mean, we'll have a start in the green is what the implied open was anyway suggesting. Thus far, too early to say, but looks like we're starting off okay. What should be in focus is IndusInd Bank, Bajaj Finance, essentially specific stocks, and even these will change actually. So we'll come to the stocks in moments from now. Rajat, we were talking about Maruti and expected to show out a good number. What do the positions around Maruti suggest?
Well, in my understanding, Maruti is headed for higher levels, but you will see one thing. If it were to move up now, Maruti around 13,200 or 13,225 would be a strong resistance, and beyond that 13,500. So I'm not penciling in beyond 13,500, whatever may be the result, because this is a technical view. The reason why I'm saying this is that despite the fact that Maruti is moving up, posting higher closes, but the GAN fan that I use, the GAN angles that I use, they are suggesting that beyond 13,200 to 13,500 is very unlikely. Even if it were to move above that, it won't sustain. And on the downside, if it were to fall below 12,500, then it becomes weak.
Right. So, a lot of action there. Maruti also will be one to watch out for. Just a couple of more, Rajat. I was wondering how you saw Tata Consumer and a Nestle. Both of them with numbers out. Nestle more positive in terms of a response than Tata Consumer. Tata Consumer saw a bit of a pull, a bit of a recovery, I think, after one bad day. Is there anything in this space that you would want to touch and a specific view on these two?
You can go for Tata Consumer, but Tata Consumer 1150 to about 1200 would be another supply zone. I mean, that supply zone needs to be taken out decisively. Only then you will find good movement on the upside. On the other hand, I would say that Nestle generally after a controversy or something performs very well. And in India, I don't think that there would be any exception. and Nestle commands something like 135 return on capital employed. So if you do not have any ethical problem, Nestle definitely is one of the better stocks in the FMCG area.
Indeed, Nestle is a better pick. That's Rajat Bose's stock suggestion. Well, we've got with us Amnish Agarwal, Head Research of Prabhudas Lilladher, joining in. Amnish, good morning. Thank you very much for joining us. We're in the thick of the earnings season and we are looking at your report where you believe 25,810 on the Nifty is your target by year end. You want to elaborate on that and tell us what's the thinking, what's the rationale, and what are going to be the key triggers?
Okay, thanks for having me. See, the main thing is that the economy is doing well, and we are likely to report at least 7% kind of a GDP growth. Monsoon this year is likely to be normal. And if there is no disruption on the political front and if there is continuity of the various policies, then I think there's a lot of money also waiting on the sidelines to, you can say, come in. So I think if the same policies continue for another few years with a clear momentum which is visible in the economy, then I think this target is very easily achievable over the next 12 months.
Hi Amnish, morning, Tamanna here, and I was just going through your report, found it fascinating because the thing is you're hinging it with the democratic hat trick. That's what you've called it, democratic hat trick to re-rate markets. Now, my question is that a third term is largely penciled in, very little chance of a surprise. But what is the upside here? We already know, and the market has already accounted for what this government will do. You've already seen those sectors run up, capital expenditure, exposure, defense, etc. So I'm just trying to understand where this further upside comes from in your view.
There are two things. While a section of the market feels that that all the positives that this government is going to come back, everything is factored in. But I think if you look at what has happened during the past 4 elections, I think the main factor to watch out for is that it has to happen in reality, because the things can change and there is always an element of uncertainty. That is one. So that is why in run up to elections, I don't rule out that the market turns a little jittery, little soft or sideways over the next, you can say, few weeks. Now, what will change thereafter is that whatever you can say on the ground reforms, initiatives, infrastructure, policies, steps they have been taken, they will continue. And you can see that first 5 years of this regime were different, next 5 years were better. And now whatever has been done in the country in the last 5 plus 5 years, now this time around, the fruits of that will be much more visible than what we have seen in the past. So if you go by that logic, I think it is, and the way these guys have given, you can say, all the details regarding on the social sector, I think it's like that India is a rising tide. And the growth rates, the momentum, I think that has got every chance to surprise on the positive side. And given the fact that India today is the fastest growing economy, we are doing well. I think in terms of markets, yes, as you said, capital goods, defense, some of these segments have moved up. So the sectoral rotation, it continues to happen from time to time. There could be, you can say, even if you look today, for example, banking, IT services, large part of consumers, so practically more than 50% of Nifty has not participated in the rally in any major way over the last 12 months. Some sectors have done well, as is always. But even in the sectors which have done well, I think over the next 2 to 3 years, there could be, you can say, new segments, new stocks. And I see a lot of steam still in the market, although one needs to be, you can say, a little bit cautious in getting into very small caps, companies without much operating history, etc.
So you're saying new sectors, new stocks. Anything that you'd like to elaborate there, Amnish?
You see, for example, you look at, say, for example, banks. Banks particularly, I would go slightly back from 2009-10 to 2000, say even 21-22. The only 2-3 sectors which were driving the markets were consumer, particularly staples, FMP, private banks, and IT services. And this pack has not done absolutely anything in the last, say, couple of years if you look. Some of the large stocks, barring, say, in some instance here or there, they have been more, you can say, sideways. If some of them have even given negative returns. Now, some of these stocks selectively, purely on a bottoms-up approach, some of these sectors can start showing some sort of a comeback. And even in the sectors which have been doing well, I think the tailwinds are not yet over, whether it is, you can say, PVs and two-wheelers in auto, whether it is capital goods, whether it is hospitals, tourism. So I think there is, you can say, enough space, enough momentum. And like, if you look at, say, last 20, 30 years, every big rally, which has lasted 5, 7, 10 years, has got new sectors as leaders. Okay, if you dissect right from 90s. So this time around, it is very clearly visible that some of these new emerging areas, your cap goods, AI will come, hospital, never existed as a sector 10 years back, practically 10, 15 years back. So many new sectors are coming in, new segments are coming in, which will continue to create excitement in the market.
Pre-open rates have settled. Just want to mark a few stocks. Tech Mahindra is reacting to the guidance that the company's provided, 5% higher. The numbers were ho-hum. There are concerns around FY25, but the market clearly likes what they are talking about FY27 and the new strategy. That stock is up. Himadri Chemicals is up 4%. Aavas Financials is up 3.5%. And Zensar Tech, something that Samina highlighted, is up 3.5%. Interestingly, UTIMC2 is up about 3%, so that is one. But on the flip side, Olectra Green Tech is down 10%. Margin miss, EBITDA miss, and sales miss too, by the way. Spark is, like say, permanent resident, as Tamanna says, 257, 5% down. And LTTS is down 5% as well on those numbers. So those are a few names that you certainly should keep in mind. CDMO players, Laurus Syngene, down about 1.5% too. Amnish, quick word on Tech Mahindra, 5% higher. One would have thought that FY25 growth remains a concern. Did you like what, I mean, why is this reaction? Because of the guidance for FY27?
If you look at in the near term, barring a few niche segments, entire tech space is under clouds. And I think this seems more from, I would say, slightly longer term strategy, which is given in a few, you can say, segments where they can do well. So I think at the end of the day, it boils down to that in the near term, when the entire sector is down, if you are giving a guidance for the slightly longer term, which gives, I would say, some sort of a visibility, then market is actually reacting to that. In the near term, I think Tech Mahindra, along with all tech stocks, it is not likely to do anything great till the overall year demand starts to move up. But if you look at, say, last 12 months or so, Tech Mahindra has also, you can say, underperformed significantly.
5% on the stock in pre-open trade. Emphasis, Zensar, Cyient, LTTS are some of the other tech companies that reported numbers. Emphasis as well, numbers were not very impressive. The stock is up flat to slightly higher. Cyient is also trading higher. Across the board, I think the market is being kind to tech companies. Even though the numbers aren't very impressive, all tech companies, barring LTTIS, are trading in positive territory. You've also got UTI Asset Management. Now, that's an interesting one we want to bring up. The stock, the earnings were disappointing. If you look deep down, they've not actually done well for the quarter. But on the face of it, because those numbers look good, the markets are getting rewarding the counter. Well, let's quickly go across to Harsh, as always, who's got a list of all the brokerages and what their top picks are this morning. Harsh, highlights from the Nuvama note on Vedanta. I believe that's the pick for us this morning.
Well, yes, absolutely, Samina. 40% plus upside, certainly not small. They've hiked their target price 394 to 542. That's not a small hike either. Just in terms of what they're looking at in FY25, they're looking at a big transformation happening. They are suggesting that Vedanta's transformation is set to complete with regard to aluminium, international zinc expansion, all of which will happen in FY25. Debt has peaked out in FY24 according to them. Cash flow is what they're expecting for FY25 to be at 14,000 crore, and they believe that the vertical split of businesses should unlock value and the SOTP value should be higher than what it is currently. They've in fact hiked Vedanta's FY25 and 26 EBITDA estimates by 18 and 23% respectively. And they've given it a very, very strong 40% plus upside. Quickly on two more notes. One is Goldman Sachs on Zomato. 30% upside is what Goldman Sachs sees. Brilliant note there. And the second one is with regard to a downgrade on Bajaj Finance. Now, that one has really moved on the back of the numbers.
Got it, Harsh. Thanks. Harsh, thanks so much for that. We'll have to wrap it up here. But those are a few notes to watch out for. Vedanta in particular, Nuvama on Vedanta, and Citi has upped the target on Vedanta as well. We have 55 seconds. Rajat, I do not have more than 30 seconds. Can I quickly come to you on Vedanta? 30-second answer, please. Okay, I don't think we have Rajat Bose. Nevertheless, well, that's about 38 seconds left. We'll watch out for Vedanta. There is a note from Kotak Securities on how aluminum is slated for some more gains, and that might benefit the likes of Nalco, Hindalco, even Vedanta, which has got a zinc and an aluminum business, which Citi in their note has highlighted could actually have some fanfare too. So watch out for some of these aluminum companies, could be interesting movers in the session over the next few days. But the first trade's about to kick in. Watch out for Tech Mahindra on the gainers list. I dare say it'll be interesting to see if Bajaj Finance, which we haven't spoken about at length, we'll ask Amnish about it, but it could be amongst the top losers as well. But here are the first trades. Flattish for the Nifty. That's okay. So we didn't get what the implied open was suggesting, which is fine, but we are in the green. The mid cap and small cap should come up on your screen. Frankly, after the gash that the S&P 500 was sitting on at about 9-10 p.m. yesterday, this is something that most people would be happy with. 0.5% for the small caps as well. Let's get the heat map up on the screen. On the gainers list, Tech Mahindra is up 7.5%. Really sharp gains for this one. Clearly the stock of the morning. The market seems to like what Mohit Joshi has outlined as a 3-year plan, and it is discounting the near-term growth concerns. Hindalco up another 1.5%, talking about aluminum doing well, and that stock has done well. Tata Steel is up in the green, despite a sell call by Citi, by the way. SBI Life up about 1%. IndusInd reacts marginally to its numbers. And then a few other stocks in the green. What's not done well? Bajaj Finance and Finserv. Clearly, the impact of Bajaj Finance. And we'll talk about this with Amnish and Rajat in detail. So watch out for these two. Apollo Hospitals corrects a little bit. Some weakness in banks. So while Kotak is flattish to 0.5% lower, ICICI Bank is correcting a bit. And SBI is cooling off a little bit. I reckon the Bank Nifty might be a bit ho-hum. But clearly the stars at opposing ends. Bajaj Finance for the wrong reasons. Tech Mahindra for the right reasons, Tamanna.
You're being kind by calling them stars, Bajaj Finance. Though the numbers were actually in line. They did guide for a weaker FY25. Though the large number of notes in Bajaj Finance saw the numbers fairly doing okay. ICICI Bank also a little weak ahead of its numbers. Kotak Mahindra having another down day. Not as bad as yesterday after a 10% cut, but still about a percentage down. Let's look at some counters in the broader markets and how they are responding this morning. I'll start with Interglobe because exciting news actually. They've ordered 30 new aircrafts. It's their foray into wide-bodied aircrafts, and Interglobe opening up with a bit of an uptick, not anything too dramatic actually, 1.5-2% up. I want to see what Vodafone's doing today because the gyrations of that stock is dizzying. So yesterday it was up. Today you're seeing selling pressure coming in 3.5% and more. Electra Green Tech already in pre-market was sulking and suffering, but it's actually better than what the pre-market rates were. Still, disappointing numbers have seen that stock open about 6% down. Zomato has another upgrade coming in on brokerage notes, and the stock's doing okay, about 187 rupees, so about 1.5% up. KPI Green actually had a decent set of numbers on the face of it, but you're seeing the stock down about 5%. Remember, this is a company which has seen a robust order book. Revenues also went up decently. Profits looked good, but the street's not too happy. L&T Tech is the other one. A lot of numbers impact being seen this morning, and L&T Tech is one of them. Look at that, 9% down on Q4 numbers. So the street giving a thumbs up down there. I'll just mark CRISIL as well. So CRISIL has got a note from SEBI to put out an ESG index, and that stock doing fairly well this morning, up about 3%. But Samina, so many more companies reacting to numbers.
Yeah, it is a morning of numbers. We'll add to the tech list of stocks that you both have already talked about. Cyient and Zenza, those are the other two you want to see how they're doing. Cyient is trading flat. Zenza is getting a thumbs up, 3% higher on the counter. And remember, the earnings were a beat, but largely backed by other income. Aavas also looking good post its earnings. You also have a reaction that I want to see that could potentially be on some other names. So Aavas Finance is up 2.5%. Som Distilleries, if you can pull that one up, they've also posted a good quarter. Numbers were good, but the stock is not seeing a runaway gain, 1.7%. Emphasis, I mean, this is shocking, 4.5% up move on the counter. Remember, their deal wins have actually declined year on year, quarter on quarter. Business is slow. Banking is a worry. Insurance is also looking tough. Headcount has come down too. But despite all that, markets looking beyond that. The con call has only just finished for Emphasis. And that's probably why the company, the stock is looking good. Management clearly indicating that FY25 will be a much better year of growth for the company, and the street is taking heart from that. So it's all about guidance this morning, right? You have Tech Mahindra from the large cap space that is making promises of a better year ahead, and so is Emphasis. Both those counters are raging in trade this morning. Along with that, on the winning side, you've got a few more names that look good. Vedanta up 5% on Nuvama's note, big move coming in there. You've got a couple of these other pharma, UTI Asset Management. Like I said, on the face of it, those numbers look great, but the fact remains that business inflows are actually reducing and for UTI Asset Management. But because of the top line looking better than expected on back of a strong reporting, the stock is up 3.5%. You've also got a few names like Bank of India, Hindustan Copper, Sterling and Wilson. Post its reporting early this week has been on an upward journey unilaterally, and today as well is no different, 2% higher on that counter. Shipwreck makers up and about, Mazagon Dock, Cochin Shipyard, that's largely been the theme of the street. Doing well once again, Mazagon Dock is up 2.5%, Cochin Shipyard seeing another gain of 1.5%. Zomato, which got upgraded by Goldman, 240 rupees is the target price on the stock. On back of that, the stock is up about 1.5%, so 188. Close to that on Zomato. On the sell side, we've already highlighted the likes of Electra and Bajaj Finance, but Vodafone Idea is trading having a flat morning. United Breweries, ICICI Securities, Deepak Fertilizers, Chambal Fertilizers, the chemicals are having a little bit of a morning of profit taking as we see it. If we can quickly pull up the benchmark and see what it's getting up to. Remember, we've said that for the last 5 days, banks have done well. This morning as well, it's not doing too badly. It is outperforming it is trading flat as we see it. But at the start of the May series, rollovers have been slightly below what we've seen over the last couple of months. So some profit taking cannot be ruled out in the early trade. Rajat, Tech Mahindra, what are you making of that up move? 9% high on Tech Mahindra, and Emphasis is up 5%. Both these companies' earnings were not very strong, but the guidance was pretty solid. Tech Funda view on Tech Mahindra and Emphasis?
The Emphasis is looking pretty good because Emphasis is very close to its 200-week exponential moving average, and chances are that you would see some kind of a bounce back from here. And once it crosses 2450, it will gain traction. So Emphasis as such is also forming a saucer on the weekly chart. That suggests that there is every possibility that although intermediate term, some bounce, some volatile range-bound activity happens, but overall the saucer pattern generally tends to complete, and especially for tech stocks, we have seen OFSS and others. So I have some confidence that Emphasis is going to do well. Tech Mahindra, I really didn't expect that this would post that kind of surge. And currently it is around, say, 1310. around 1400, you will face some resistance. You will see it facing some resistance. And after that, if it were to cross 1435, it will gain real bullish momentum.
This is a surprise move by every stretch of imagination. I don't think anybody would have thought that this result and even this commentary, despite it being such a positive commentary, would account for a 10% uptick. The stock of the morning. If Kotak was the stock of the day yesterday, Techem is the stock of the day today. But on the flip side, and Amnish, want your view here, and then Rajat, want your view as well, on Bajaj Finance. This sharp downtick that we're seeing on this stock today, 5.5% lower. What's your sense? There were some misses, but their guidance didn't seem to be too bad. What's happening here with Bajaj Finance?
You see, the problem with Bajaj Finance and some of these NBFCs is that they have been trading at very fancy valuations. Now today, we talk to anyone, 3.5 times, 4 times has become like a base in many of these housing finance and your housing finance NBFC companies. Now you take stock and look at what has happened to banks over the years. Many of these banks, they were trading at 3.5 times, 4 times. And today, no bank is about 2.5 times. So the similar kind of a thing can happen to NBFCs as they grow in size and as they, you can't continue growing at 30% CAGR for your life. The growth rates in the long term, they will moderate. And once that moderation happens, the kind of price to book that some of these NBFCs are trading at, so that is likely to come down. That is one, and that is something which is structural. The second aspect here is that Bajaj Finance in particular, if you look at the kind of, you can say, tightening which RBI is doing for NBFCs which are larger in size, Bajaj Finance falls into that and it is among the largest ones. So over the period of long term, can these NBFCs be directed to be banks? The possibility of that can't be ruled out. So I would be very hesitant to pay Bajaj Finance or for that matter any NBFC price to book which is, say, in multiple times of what the best of the banks are today trading at. So I think that is practically, you can say, what is happening in my view.
Rajat, before market open, you said you prefer an Indus into a Bajaj Finance. Seeing how the opening has been, do you reiterate that?
I would say Indus Ind is much better. Bajaj Finance, if it were to fall below 6,800, then it would actually go beyond its previous low. On the other hand, Indus Ind looks pretty good. If I were to choose a stock that I would go long on between the two, it is an obvious choice that Indus Ind is a better bet.
And one of your calls today, Rajat, is having a rough morning, LTTS. The numbers have not been seen very positively by the street. Stock nearly 9% down. Would you want to re-look at that call, or what would you do now with it?
I would say that LTTS, one should not get into this because the way it has fallen, it has broken down its 200-day exponential moving average. And unless you are a long-term investor, and I rue the fact that I have talked about it today on your channel, because as per SEBI regulation, I would not be able to buy before next Friday. Otherwise, personally, I would have bought it because I know I have studied and I feel that over the longer term meaning several years, it would definitely do well. But exactly the opposite view one should hold if one is a short-term player. Short-term, this is no longer a short-term bullish trade. That it has broken down below the 200 exponential moving average means that there is every possibility that 4,500 might also be tasted.
So I get that. Your call is from a longer point of view, Rajat, not in the short term. Short term, you're saying avoid. At these levels for the long term, would you say accumulate LTTS?
I would, but if you are really into the stock for the long haul, then definitely you can. But short term, it may show some volatility because the chart pattern suggests that around 4,500 to 4,250, there is major support. It is unlikely to go below that. only fear in my heart is this, that the day Fed cuts interest rate, our bull market might come to a halt. That is the thing. It is a counterintuitive thing. Someday, if you offer me some time, then I can explain as to why Fed rate cut actually gives a different picture altogether, along with the Fed balance sheet and how QE and QT operates in that. So that is what I'm really afraid of. If Fed cuts rate, the day Fed cuts rate, I would suggest booking profits on a large number of stocks, whichever looks weak.
We will get you back, Rajat, for a more detailed conversation on that. That definitely is an interesting sort of counterintuitive, as you put it, angle that we should talk about. Suffice to say, some winners, but a lot of losers in trade today. TechM is that big winner, and difficult to predict which way the street would go, but definitely a variety of views on those tech stocks at least. Look at TechM, 10% up now. Very quick break. Amnish, Rajat, thank you so much for joining us today. Always great to have you on NDTV Profit. We will come back after the break. We're speaking with the management of Cyient. Stay tuned. Focus on Cyient. Their numbers have been out. Karthikeyan Natarajan, Executive Director and Chief Executive Officer at Cyient, with us on the show. Mr. Natarajan, very good morning and great to have you on. Let's just go through what this quarter has been like. Now, I just want to focus on DET and let me get straight to that. Your pipeline has been good, 9 large orders, but the QOQ revenues have been down about 0.5% in constant currency terms. The expectation of the street was slightly larger. Can you give us a sense of where that sort of choke point is? The orders are coming in, but where do you see the headwinds?
Yeah, good morning, everyone. Thanks for having me on the show. And as we have shared in our investor call, and some of the deals that we expected to flow in the early part of Q4 and did materialize, but around the end of the quarter, which didn't come on time, and that really did not make us to meet our earlier expectation.
Okay. Do you expect these to now come in Q1? Can you sort of give us a little more detail on the guidance as far as the DET segment is concerned? And that is your big one, isn't it?
Yeah, we talked about our guidance being at the high single digit for fiscal 25, and which is essentially led by the growth driven from sustainability, aerospace, automotive, semiconductor, and we are hopeful that connectivity will come back to growth. And this is based on the confidence about the 9 large deals you talked about, along with the orders that we carry into fiscal 25.
What is the level of expectation or the guidance on margins going into FY25 estimated, Mr. Natarajan, in terms of the sectors that you've spoken about, these 9 large deals, aerospace, etc., all of this sort of gloom that we're seeing on the US economy, are you seeing that translating through?
Yeah, I think we talked about the macro challenges do remain, right? And whether it is about high inflation, interest rates, and geopolitical conflicts, and all this is making the environment challenging. And having said that, we are very pleased with our performance of fiscal 24, with about 12.6% year-on-year growth and 30% on earnings growth. This has been something which is phenomenal over the last 3 years, and we are happy with our performance. And we are confident that we will be able to maneuver through the challenges that are ahead of us.
In terms of your revenue guidance that you've talked about, Mr. Natarajan, you've guided for a high single-digit revenue growth. I just want to understand the basis of this. Have you been a little conservative here, looking at the overall sort of challenges coming in, etc.? And what is the near-term growth visibility you see?
Yeah, we talked about, we expect probably Q1 to be soft, and we want to see how H1 pans out, and then we'll revise the guidance based on how H1 pans out. And we do expect H2 to be stronger than H1 at this point of time, but we just want to see how the macro situation pans out and how the customer orders getting converted into executable work. And in some of the cases, we do have order book, but the customers want to defer to execute over a period of time. And we just want to know how all this would pan out in the next 6 months, and then we'll take any revision accordingly.
Okay, fair enough. Just give me a sense of the aerospace vertical. That's a big one for you. There have been some decent orders and some big ones actually coming out. Do you see that bottoming out at this point? What is your outlook for this vertical?
Yeah, so if you look at last 12, 18 months, we have seen that air travel have come back and come back stronger than 2019. And we do expect our customers to continue to see challenges on supply chain, and they still have more demand than what they can fulfill, be it on manufacturing or production, as well as on the aftermarket MRO. So we would see continued growth on the manufacturing engineering as well as aftermarket MRO on the back of one of the large deals that we announced, which is a digital aftermarket. And this is supposed to map out the customer journeys of our customers, and they expect to bring a lot of digital solutions to help them to manage the challenge that they have. And also about digitalized manufacturing solutions, which is going to see a significant uptick as everyone wants to increase their ramp-up capacity, and they have the fixed capacity, and can they gain more out of every day, every month, and which is going to be enabled through a lot of productivity improvements, Industry 4.0, helping them with the digital inspections, and what can be done through model-based systems. I think a lot of them are going to be bringing the productivity up so that they can get more output in the existing capacity.
Just a couple of last points, Mr. Natarajan. What is your outlook for the ER&D segment? You're saying you're expecting a pickup there. It's not been superlative this quarter, but what are you expecting to change? And which are the verticals you hope to fire?
I think like in the medium to long term, we do see a good potential of growth coming from sustainability and automotive, semiconductor, healthcare and life sciences, and as well as on the connectivity side on the back of aerospace. So we do see that in the medium to long term, I think the prospects are pretty good. And given the challenges of demographics coming out of Europe and the significant growth ahead for many industries over the next 5 to 10 years, led by software-defined everything, digitalization, and the impact of artificial intelligence and automation, I think we do expect the medium to long-term prospects to look pretty good.
Thank you so much, Mr. Natarajan, for joining us today and speaking with us on NDTV Profit. Always great to have you here, and we hope to speak with you next quarter as well. So that was the top management. of Cyient speaking on their numbers. The street has been tepid about it. We'll quickly just pull up the stock before we go into the break to see how Cyient is responding. And after opening up pretty robustly, come off some of those gains. Time for a short break, but on the other side, we have conversations with top managements of all of the companies that have come out with numbers today. Don't go away. Welcome back. It's been a steady Q4 for L&T Tech. The quarter grew sequentially, boosted by seasonality in SWC or Smart World and Communication business. My colleague Niraj Shah spoke to Amit Chadda, MD and CEO at L&T Technologies, decoding their Q4 earnings. Listen in.
So if I look at the quarter gone by, 5.1% constant currency growth quarter on quarter sequentially, amongst the best we've had in the last few quarters, number one. Number two, 17.9% growth in constant currency, getting us to a $1.2 billion run rate, where we were $1 billion less than 12 months ago. So I do believe, all in all, I think the teams have done amazingly well this year, given the climate that it was. Multiple $10 million plus deals. In fact, if I was to reel off, we've been able to close a $100 million deal this particular year. We've been able to also get in multiple $20 million, $30 million deals, and $10 million deals. So all in all, pipeline stronger than last year, and stronger than last quarter. So we do believe that as we move forward, we will see traction continuing to improve. Again, knock on wood, and we are of course being cautiously optimistic.
Any formal guidance that you're laying out? Excuse me, I don't have a handle on that. Maybe you put it out with the release, but any formal guidance that you're laying out for FY25, part one, and part two, at a point of time when a lot of the peer set, be it IT services, which is not exactly your peer set, but I'm just humor me, IT services or otherwise, are talking about uncertainty in NA and couple of other parts. How confident are you of business prospects?
Sure. So we've guided 8 to 10% constant currency organic growth for FY25. We've also reaffirmed our aspiration of getting to $1.5 billion run rate in FY25. So we've done both of those. So there is an inorganic element that should kick in sometime this year. Having said that, if I look at the three segments, so we've restructured the company into mobility, sustainability, and high tech. And if I was to look at the three segments, I believe that transportation or mobility will continue to spend in software-defined vehicles and vehicle engineering. We do believe that sustainability, there will be a lot more happening in plant engineering, and we continue to hire and actively hire in that space. And then in the high-tech space, I'm fairly comfortable that the hyperscaler spend is coming back, as well as driven by AI and software-defined everything. There is an embedded systems, there is a growth coming in from a semiconductor sector again. So those are the positives, if I may, for FY25. Looking ahead, industrial products, and parts of telecom or operators seems to be a little sluggish as we look at the future. But that's from an engineering standpoint as we see it. But all in all, year to play out. It just started right now. As you said very rightly, uncertainty, so we're baking it all in as we are providing the guidance at this stage.
Interesting. I heard you say semiconductor and the positive side, because there was, I believe, some bit of spending freeze that most companies, including you, were seeing. That's changing, you're saying.
So you know, there's a spend in Semcon for AI chips. And if you remember, I had committed to you that we'll get people trained in this area.
Yes.
Happy to share, we've got more than 3,500 people trained in AI right now. We've got a differentiated strategy of hardware, embedded software, and then application software and data as 4 layers for AI, not just application data. And that, I believe, is helping us as we go to the market in terms of winning new deals and gaining market share. See, it's all about gaining market share at this stage, because some of the spends may have stagnated, so you will have to find newer pools and newer areas and stay differentiated, if I may, to be able to provide value to the customer. And that's what has been our endeavor over the last few quarters and months. And I believe as we go forward, we will continue to play that out and be able to build on our pipeline as well as closures.
Interesting. So, Amit, would it be fair to say that given a choice, because it's an uncertain global environment, if you get business, you might maybe compromise a little bit, not compromise, but maybe give a little bit on the margins as well in order to get that business in? A lot of your peer set is talking about that. I'm just trying to understand how you're thinking about it.
See, more than giving up margins to win deals, I would rather invest in advance in soft assets, in labs, in infrastructure that can help my client get to work faster. Rather than providing rate discounts and winning at lower margins, etc. So our strategy is slightly different in the ER&D world. So rather than trying to buy deals at much cheaper prices, etc., I'd rather create a differentiated strategy that allows me to be able to be a value player. So we'll continue to do that. So you will see some investments that we will make additional to what we've been doing normally. So normally we spend between 1 to 2%. Our investments will go up slightly in the near immediate term because we've restructured now in mobility, sustainability, and high tech, and we are making those investments. There's a new lab that's been set up for EV value engineering in Bangalore. There is further investments being made in Dallas, investments being made in Mysore for software-defined everything, digital manufacturing solutions in Chennai. So you will continue to see some of this happening as we go forward, because we want to be able to future-proof our business for tomorrow and be able to grow faster than industry. That's the goal.
Okay, so in some sense, in the Q3 call, you mentioning that the winter is over and spring is around the corner, it seems to be kind of turning out to be true, Amit?
So 5.1% clearly had spring is here. Yeah. You would agree with me?
Yeah, I would agree with you. Okay.
Now we have to see whether it gets to summer or stays as spring. We'll see.
That's true. Visibility on the cybersecurity deal, Amit? I mean, just kind of bring that up.
Cybersecurity, it's a great deal, $100 million or 800 crores. You know, it's very important. Number one, I'd like to thank the government of Maharashtra for having confidence in us and their far-sightedness to be able to think that cybersecurity is extremely critical. This is building forensic audit, forensic trail, forensic investigation infrastructure for the state of Maharashtra. And this will be up and live in about 6 to 9 months from now. We are leveraging our partnerships with Palo Alto, IBM, Cisco, and others to bring it forward. It's a world-class solution that we've architected. Work has already started with the team. I'm personally reviewing it with our Chief Operating Officer on a regular basis. He's been focused on this. We're confident as we move forward. This will be a state-of-the-art project that will help us improve the citizen's life, or more, and equally importantly, build up solutions that we can take to others.
Sorry, just one final follow-up, because I know you're short on time. But when I talk to companies globally engaged in this space, whether services or otherwise, Checkpoint, this, that, what have you, everybody talks about how the quantum of spends and the nature of sticky spends in this space will really gallop at a very fast clip over the course of the next 5 years. What are your thoughts?
Very interesting that you bring it up. Cybersecurity remains one of the hottest topics, if I may, and the highest growth areas that you can look at. Look, more than that, I would step back and say, I mean, and now I don't think we can trademark the work. We're calling it SDX, software-defined everything. I do believe that software-defined everything, embedded systems, these are two areas that will continue to see spends as you move forward. People will cut in other areas and spend in these areas. So as long as you're covering a company that continues to invest in these areas, I can promise you growth will continue to happen.
Okay. Amit, sorry, I've done 9 minutes. I'll just take one more minute. This will be my final question. I heard you say that the guidance factors in organic growth of 9 to 10%, if I'm not wrong. At some point of time in the year, the inorganic comes in. So
what I'm saying is, organic guidance at this stage is 8 to 10% for the year. 8 to 10% for the year. In addition to that, there should be inorganic kicking in because we have an aspiration to get in to $1.5 million in FY25.
Yeah. So if it kicks in, so just to get the numbers straight, what does it take the what would it take the aspirational growth catapult to in terms of a number?
So let's get to the 1.5 billion run rate first, and then we'll tell you internal targets are always higher, but I want to be careful. I would like to commit what I can deliver, and then I would like to deliver what I have committed.
All right, that was the management of LTTS. That stock has seen pain. I just want to pull up what's happening with them. 7% down, even now on that stock. But before we wrap up India Market Open, let's listen to Emphasis. It's a morning of IT company result and the reviews. The top brass is talking about Q4 earnings and more.
So I think firstly, we're very pleased with the fact that we've had a pretty decent Q4 from a sequential growth perspective. Right, we delivered 2+% growth. Led by two of our biggest verticals, BFS and TMT. And I think we had called out for banking and tech to lead the recovery in the Q4 numbers. We were focused on recovery in the back half of FY24. It took a little bit longer, but I think we are very pleased with the way we've delivered that. There is early signs of at least some discretionary spend, shorter term deals, short burst, short duration projects. That's always very heartening to see. There are also some pickup in activity in pockets of banking that was quite muted last couple of years around capital markets. I wouldn't say that it's a roaring back to spend model yet, but definitely appetite is higher, and I think a little bit of that fatigue from overspending in 21 and 22 seems to have kind of gone away, and early signs of capital market opening up is definitely giving them comfort. Second, I think we're very pleased with the fact that what seemed to be a very big hype area around AI and Gen AI early part of calendar 23 is now actually converting into not just pipeline but also deals. So opening up a lot of new pockets of spend. How do you embrace tech to take cost out? How do you embrace tech to transform operations, customer experience, developer productivity, compliance monitoring? KYC. So lots and lots of real, credible, tangible deal constructs that are not just being talked about, but actually are in the pipeline and are in the wins. And I think that opens up a whole new addressable market for us. So we're very pleased with that as we go forward. The fact that these shorter term deals are showing some revival also gives us a little bit more confidence on revenue recovery, because a lot of these deals can be consumed within the year versus having a long duration deal where ramp up takes 6 to 9 months. We've seen better conversion of previously sold TCV to revenue as well this quarter, so that also helped the overall book of business for us. I think the TCV number is a little bit muted, driven partly by the fact that there is a bunching up of deals that happened early in the year, and secondly, this the 0 to 10 million deal category has actually been the highest TCV number for us in a few quarters in Q4. But on the flip side, that gives us confidence from a revenue growth standpoint as well. So I think overall pretty pleased with the way the team executed in a still tough macro environment, because uncertainty and creates inaction still underplay. Lots of countervailing forces between macro and inflation and interest rates and geopolitics. But the focus has really been on the micro and just driven by in account actions, wallet share gains, and moving very aggressively into these new tech areas. Also pleased with the margin performance, and Manish can talk a little bit more about that.
Right. I'll talk about margins in a minute, but let's actually, why don't you talk to me about margins before we go into TCVs in a little more detail?
All of what Nitin said did require investments, and we were able to deliver expansion in margins. Despite that, on a reported basis, the margins were 14.9%. But if you adjust for acquisitions, that's close to 16%, which is an expansion over the last year and over a few quarters that we were reporting. Especially happy with the fact that all of this came with the ability to kind of ensure that we continue investing in areas which will give us revenues in the future, which means investing in working with the clients, proof of concepts and stuff like that. Other than the margin, I think cash is king, as they say. And, we had a very strong cash generation quarter, 116% of PAT. And when you think from a year-on-year perspective, that's 150 million growing to 237 million, more than 50% growth in the cash generation. So very happy with the cash and the EBIT performance. I think the silver lining, or rather, even bigger news is the fact that EBITDA expanded to 18.7% from 18% last quarter.
Right, noted. So I guess no disappointments, at least internally. A couple of areas I want to talk to both of you about is TCV, and I'm sure both of you are expecting this to be my second question. While some of your peers have closed out at record values in TCV, with your company specifically, there's a decline in deal wins, not just as compared to your peers, but even if you compare it to your average historically. What is the reason for that? So I do understand that conversions, there is a delay, decision making is slow, values of deals, like you said, has also in the smaller band. But why is there a decline in the number of deals you're closing out?
I think I wouldn't say there's a decline in the number of deals. There's definitely a softness in the overall contract value reported. So I think the first thing to note is we are not including any renewals in our deal numbers as we report them. And that's been consistent for us for the last, as many years as we've reported it. So there is no lumpiness of year-end renewals or first quarter calendar year renewals for us. Second, I think we had a pretty big bunching up of deals earlier in the financial year. We had a record quarter of 700 million plus. As that pipeline got consumed, and the rest of the pipeline, obviously, we had to move that through the stages. Third, I think the duration of deals and 0 to 10 million, kind of having the highest contribution this quarter versus, I would say, the previous 4 quarters or 6 quarters, also is a sign of a little bit of recovery, as I mentioned. The metric to note, though, is the pipeline is actually still fairly healthy. It's up 5% sequentially, and it's up pretty broad-based. Even in our banking business, which was obviously a little bit stressed last 12 months, the pipeline is up almost 19% on a sequential basis, and our top 10 account pipeline is also up. So I think all the leading metrics are pretty decent. We will obviously continue to focus on large deals. We had 1 large deal in Q4, but 15 large deals for the year. That definitely gives us runway to consume those large deals and convert those to revenue. And hence, there is no, I wouldn't say, concern on any short-term impact on revenue growth potential because of the Q4 TCV number. So pipeline is great. I think the conversion to pipeline, yes, it's been a little bit slower because of seasonality. Client budgets were a little bit uncertain. Now we are starting to see that pick up as well. Activity is actually very, very healthy in most of our units and in most of our markets as well from a geo perspective. So I think that's the way to think about. There are 2 or 3 nuances on the TCV front, as I just mentioned.
As citizens, we must remember that voting is not only a privilege, but also our duty towards our nation. I, Akash Ori from the DLF Group, pledge to encourage my colleagues, their friends and family to vote for the government they believe in. This is the strength of our democracy.